Good morning, Michael Feller here on Deals TV for Business Spectator. It's Thursday the 24th of September. And first up this morning, a story about AAPT in the Financial Review's Street Talk column. It's said that the company may be split between broadband provider iiNet and Vodafone Hutchison Australia, the recently formed joint venture of Vodafone and Hutchison, the British and Hong Kong telecommunications giants. It's interesting because AAPT already owns 18% of iiNet, and AAPT is in turn owned by Telecom New Zealand, which owns 5% of the Vodafone Hutch joint venture in Australia. So that's one to watch there. And elsewhere in telecommunications, as we foreshadowed or as we flagged in this morning's breakfast deals, now could be a good time for Telstra to get into countries like India. Already the Communications Minister, Stephen Conroy, has proven that Australia has sovereign risk, and maybe a country like India would be a safer destination for Telstra. India certainly seems to be an interesting destination for Vodafone, which, according to the Economic Times of India, yesterday increased its stake in its local subsidiary, buying shares from its local partners there. Also in India, the deal between Bharti Airtel, one of the country's largest mobile phone providers, and MTN of South Africa appears to be on the rocks. Apparently there's intense political opposition for a deal in South Africa. So if that falls apart, now would be a good time, we would think, for Telstra to swoop in. And speaking of companies splitting, Goldman Sachs JB Weir has released an interesting report on what would happen if Origin Energy split its coal seam gas assets from its utilities business. Apparently there would be 40% more value in the company if it did so. Anyway, we'll see what happens there in due course. And also today, expect more in the capital raisings front from listed property trusts. Over the next few weeks, rather. Yesterday, of course, Valad property raised $59 million, and there could be more in store. And finally, in the property space, Suncorp Metway is selling the LJ Hooker real estate business to LJ Hooker's grandson. Apparently, it's for around $70 million, at least according to the Australian. So that's all we've got time for this morning. I'll see you tomorrow.